Hello everyone. Today's video is a reality check on Ola Electric, what the company achieved, where it stands now, and why you should be careful if you consider investing. This is just a breakdown, not a buy or sell call. Ola Electric is an Indian electric two-wheeler maker focused on scooters and related EV mobility products. It has been among the leaders in EV scooter volumes in India in recent years, supported by aggressive product launches and branding. The company has talked about big plans around new Gen 3 models, a battery and cell roadmap, and a wide distribution push to capture EV demand. In FY25, Ola Electric delivered around 3.59 lakh vehicles, higher than the previous year's 3.29 lakh units. But revenue for FY25 was about 4,645 crore, lower than roughly 5,126 crore in FY24. Which signals pressure on average selling prices and product mix. In Q1 FY26, April to June 2025, the company delivered 68,192 units, but revenue dropped to about 828 crore, almost 50% down year-on-year, and the net loss for that quarter widened to around 428 crore. Earlier, in Q4 FY25, revenue fell sharply to about 611 crore, and net loss hit roughly 870 crore, indicating very high cash burn. There are occasional signs of cost efficiency and margin initiatives, but overall losses remain deep. On the positive side, Ola Electric still holds a meaningful share of the EV scooter market, with lakhs of units delivered and strong brand recall in the EV space. The company is trying to reduce costs through Gen 3 platforms, more vertical integration in batteries and components, and internal efficiency programs. Over the last few quarters, management has highlighted some operational improvements, which could help if demand stabilizes and execution remains strong. However, risks are very high. Losses at both annual and quarterly levels are large, and cash burn continues despite cost efforts. Even with decent delivery volumes, revenue has fallen, which hints at aggressive discounting or a tilt to lower-priced models, putting margins under pressure. The EV two-wheeler space is getting crowded as large players like TVS, Bajaj, and others push hard, and Ola's market share has already seen pressure. Execution on ambitious plans like cell manufacturing and large-scale expansion is not easy in EV manufacturing, and delays or issues can worsen financial stress. The stock has also been volatile, and with such uncertainty, the downside risk to capital is significant. So, this is a neutral breakdown, not a buy or sell call. Ola Electric is still a hopeful EV player with scale and ambitions, but right now, the financial picture is weak, revenue down, losses high, and margins under strain. The journey to stable profitability is uncertain and depends heavily on execution quality, demand recovery, and strict cost control. Warning: this company is still loss-making, and investing here means taking meaningful risk with your capital, not buying stable returns. If capital protection matters more to you than speculation, treat this as a high-risk bet and think very carefully before putting in money. If you found this breakdown useful, do like the video, share it with other investors, and subscribe to the channel for more such reality check analyses on market stocks.